Welcome, and thank you for taking the time to join us today. This is our second show, and I hope it'll give you a chance to understand further what we do as a company and how we can help to solve some of the key issues around the safe and rapid movement of cash and securities. Today, we'll hear from industry experts Chris Giancarlo, former chairman of the US CFTC and now a senior advisor to Baton, and Colin Lambert, publisher of the Full FX. Jerome Kemp, also a senior advisor to Baton, will be speaking to Mariam Rafi, Managing Director, Global Head of Financial Resource Management, Futures Clearing and FXPB at Citi. And we'll also hear from our CEO and founder, Arjun Jairam, and from Tucker Dona, Baton's Head of Business Development and Client Success. Now I'd like to begin by introducing Chris Giancarlo and asking him for some insights on the market in which Baton operates. So it's an enormous pleasure and privilege to welcome our first guest on the show today, Chris Giancarlo, Chairman Emeritus of the US Commodity Futures Trading Commission, Senior Counsel at Wilkie Farr and Gallagher, co-founder of the Digital Dollar Foundation, and most recently, and we're so proud of this, Senior Advisor to Baton Systems. Chris, welcome to the show. Great pleasure to have you here, as I said before. I think you'd like to start off with a few words.
I do, Alex. Thanks very much. It's great to be with you. During my 5-year tenure at the U.S. Commodity Futures Trading Commission, I talked a lot about the significant operational, transactional, and capital complexities that were imposed upon the financial service industry following the 2008 financial crisis. And I also talked about how advanced new technologies are really needed to enable the financial service industry to manage those operational and capital complexities. Well, since completing my government service in 2019, I've returned to the private sector, where I spent the first 30 years of my career. Well, I'm now an investor, and I also serve as an advisor and director to a number of both established and early stage financial service companies. Some are in traditional areas of institutional trading and markets, and others are in cutting edge fintech and cryptocurrency. Well, since returning to the industry, it strikes me all over again of the need for advanced technological solutions to those operational and capital complexities. It's as great as it's ever was. And that's why I'm so pleased to serve as an advisor to Baton Systems. Baton directly addresses those operational and capital complexities by automating and synchronizing the movement of assets to reduce risk and to provide settlement certainty. Baton allows trading firms to optimize the use of cash and securities, reduce settlement costs, and therefore free up assets and free up capital. Simply put, Baton is a faster and better way to deploy financial assets. It's a better way to do business. Baton is adept at overcoming settlement and liquidity challenges for peer-to-peer FX transactions and internal cash management and treasury operations. And in a series that's in an area that's of particular interest to me because of my work in the over-the-counter derivative markets, Baton solves the enormous challenges of collateral workflow for cleared derivatives. And in the wake of the Archegos meltdown, global regulatory standards at IOSCO, the International Organization for Securities Commissioners, have begun a process of reviewing derivative margin rules and internal audit of collateral management. And I think firms will find that Baton provides an answer to this renewed regulatory call for more accurate and accountable management of trade collateral. So I'm really proud and really delighted to be part of a solution to a problem that I've been talking about for a long time. That's why I'm so proud and so pleased to be part of Baton Systems.
That's great. Thank you, Chris. And I think for the viewers, there'll be a presentation by Tucker Dona later on in the show, actually showing the collateral workflow solution. So if you've not seen it yet, really worthwhile hanging around to see that later on. I think you'll find it interesting. Chris, let me start by referencing a recent interview that you gave where you spoke about, and I think this was at a national level, but I want to sort of drill down. You spoke about the obsolescence of current financial infrastructure and regulatory structures. And I guess the question that I have to you is, to what extent do you think an improvement to payments and settlements processes generates a competitive advantage at a national level, but also for individual firms or for groups of firms that choose to participate in that common framework?
We in the West, we enjoy a tremendously sophisticated financial system with tremendously sophisticated financial infrastructure. But it's all premised on models and forms that were built in the 20th century before this new wave of the internet that some people call the internet of value. And what I've been talking about a lot publicly is how those venerable systems that we built in the 20th century are really in for a ground-shaking, the ground-shaking impact of this next wave of the internet. And we're seeing that, with the blockchain revolution, which really changes the whole way we go about recognizing transfer of value. And so the time has really come for us to take a new look at those old antiquated systems. And this is especially so in the wake of all the changes that have been wrought by the financial crisis. As I said in my remarks, the financial crisis caused regulators to impose a whole set of new mandates and capital requirements on that old venerable financial structure that are really difficult and really complex and consume a lot of capital. There's a lot of latency. And the only way to break through that is going to be through some of these new technologies, of which Baton is really pioneering a lot. So I think there's enormous opportunity. There's also enormous risk in not moving forward and not adopting some of these newer technologies. The amount of capital capture, the amount of settlement uncertainty, of collateral management or mismanagement or undermanagement, lack of precision in management is what's at stake here. It's both challenge and opportunity for firms to adopt new technologies in the wake of this really rise of a whole new way of looking at the movement of things of value.
Yeah, okay, that's interesting. And so thank you for that, Chris. It seems to me that this obsolescence, this challenge has been building up over a number of years, and there hasn't been much movement in recent years. What's changed now? Is it that we can, or has something else happened? Was we need to more, or what? What are the drivers here for change?
Yeah, so Alex, before I went to spend 5 years in Washington as a regulator of the derivative markets, I spent 15 years on Wall Street at one of the leading dealer brokerage firms, GFI, that served a lot of the major houses on Wall Street, not just in the US, but globally. And I saw firsthand how some firms managed their collateral, managed their over-the-counter bilateral collateral very, very efficiently. But we also saw how some firms managed it very inefficiently. And when the financial crisis came, that got them in trouble. And even outside of financial crisis conditions, it was sunk costs. It was a waste of money because it wasn't done as efficiently as it could be. I know that some of those same conditions are in place today. Some firms manage their collateral well, some don't. That's a difference between leadership and lagging behind. That's a difference between maximizing one's balance sheet and underutilizing one's balance sheet. But what raises the stakes are two things. One, the interest of regulators now in collateral management in the wake of Archegos. And as I mentioned in my remarks, IOSCO, which is the gathering point for all the world's securities regulators, has now made this an agenda item. Its chairman, Ashley Alder, recently stated that this is now going to be top of IOSCO's agenda. So the regulatory challenge is one. The other one is simply that technology is coming on fast. There are going to be more efficient ways of doing this, and leading firms are going to adopt that technology. And the firms that don't are actually going to be at a capital disadvantage and a collateral disadvantage to the leading firms that adopt these new methodologies.
Yeah, okay. I think that sounds exactly right to me. And I think what you said there, you spoke about collateral, I think applies to sort of settlements and payments generally, just in terms of the whole leadership piece. So moving on, I think, to sort of settlements and payments, where Baton's solution included, almost all, I think perhaps all of the solutions that you see being proposed do require multiple participants to join a common network, and it's that commonality that gives efficiency and control, perhaps also some degree of centralized governance, which you also referred to in a recent interview. So how do you think these networks get to be built and get to be encouraged to grow? What are the characteristics then of the participants and the network itself that mean that something will flourish and something else won't flourish?
Right. So look, in the last 20, 30 years, the power of the internet, we've all become accustomed to the power of networks, right? Just in retail shopping, look at the power of the network. If you're on the grid, your ability to retail is enormous. If you're off the grid, it's very, very challenging. So networks are extremely powerful, and they provide power to the participants in them. We've seen that. But how were networks built? Well, it's carrot and stick, right? Carrot is the market leaders recognize the power of networks and join early. And the stick is the laggards fall behind and lose market access by not being a leader in the network development. But there's also now going to be a regulatory component as that as well, to add a stick to an additional stick to that. Regulators are going to demand a collateral management and transparency and efficiency. They're going to demand settlement efficiency and settlement certainty. And so the answer to that is going to be being part of the network. And so I think that the combination of carrot and stick is going to drive, first, as it always does, right? The most forward-leaning, thoughtful firms are going to be the leaders. And I encourage all firms to prioritize this, because being early is going to have certain advantages in its own right.
Yeah, I think that's an interesting response. And so if as we think about maybe the industry as a whole, and maybe we think about those participants that that may be slower adopters, if these processes aren't changed and there are new market participants who are trying to stake a claim, there are market participants who haven't been global leaders who are stepping up and taking advantage of this change, how much risk do you think, how serious is the risk to the current leaders in banking and specifically in capital markets if they don't adapt?
I think the risk is been present for some time, but I think it's the importance of it is only going to go up. I want to point to regulators focusing on this issue. I want to point to the rapid development of the technology. Technology is its development, but also its deployment is accelerating in the financial service industry. Leaders are accelerating and gaining even ground over the laggards.
Yeah.
And so the importance of being part of the wave is more important, I think, than it ever was. I don't think one can wait and think they can join late in the day and have the same opportunities of those who moved earlier on.
Yeah, that's interesting. And so I guess the final question for you, I think we're probably running short of time now, but I just want to ask this: is there enough momentum now to solve? Not, I guess, to implement the solutions. I think we know that from a technical perspective, the solutions are available. Is there enough momentum now to implement and deploy these solutions now for settlements and payments and related issues? Or do we need to have another crisis, another sort of regulatory sort of, strong arming to prompt that sort of radical rethink and radical readjustment?
Yeah, so, the business cycle always plays such an important cycle in the cycle of change. And unfortunately, when the sun shines, there are those that follow the old adage of making hay. And unfortunately, when the sun shines, some don't follow that adage and use it to just simply do it the old-fashioned way and try to maximize the return. The problem is now is the perfect time to adopt systems that give greater settlement certainty, that provide greater collateral management precision, because that additional efficiency is going to be perhaps the difference when the sun stops shining in success or failure. And so I think the wise are the ones that will use this opportunity of robust markets, a risk-on environment, to use it to shore up their resources, their capital resources. They'll serve them well when markets are less robust than they are now.
Wonderful. Chris, it's been an absolute pleasure. Thank you so much indeed for taking the time. Welcome aboard Baton Systems. We're delighted to have you, and I hope we can invite you back for another show sometime soon. Thanks a lot.
Let's do it soon. Great to be here.
What a fantastic way to start the show. Now I'd like to hand over to Arjun Jayaram, our founder and CEO, for a company update.
Thank you, Alex. On the company update side, I thought I will share 3 things with the audience today. First, let's talk about strategy. The world of clearing and settlement is going through some very important structural changes. I'll tell you how we are thinking about this and positioning the firm for the next 2 to 3 years. The next, we'll talk about the people and the personal side of the business. And lastly, I'll tell you the product enhancements we've been working for the past 2 to 3 months. Let's start with strategy. As many of you know, Baton has the first interbank FXPB settlement platform. This is the one that actually settles their OTC FX settlements between banks with a series of operating rules and settlement finality. Now, one of the weaknesses in the Baton story was, how do you trust Baton to be doing the true interbank settlements in the order of hundreds of billions of dollars, if not trillions of dollars? Now, we listen to our customers. This is where we are thinking about the next generation of our PVP platform that we will be rolling out to the markets. This is going to be industrial scale, highly scalable, highly reliable, and very secure. And the most important thing is that we believe that we will be bringing in an FMI who is going to act as a trusted third party to be the administrator of the platform. Let me talk about this a little more. Now, the operating rules that Baton has tells you about the different roles of the members in the system. That is, you have settlement participants, you have account banks, and you have an administrator, and Baton acting as a technology platform. Now, one of the things that we wanted to bring in was an FMI who's already regulated, that's going to administer this rulebook, that is going to set the eligibility criteria for the members to join, that's going to get into the things like dispute resolutions and also default management. Now, one important distinction, we are not looking at an administrator to be the guarantor of the settlements. This is going to be an OTC settlements between banks under the ISDA contracts. The administrator is only going to facilitate the administration of the platform and only going to step in the case of a dispute or a default situation. And all of this is governed by the rulebook. This is going to be the first platform outside of CLS that is capable of doing a true interbank settlements. This will not have the restrictions of the need for central banking accounts. It will also be able to settle significantly larger amount of currencies than the CLS is able to support today. We're very excited about this part of our journey. We are looking to have our first set of flows in production towards the later half of this year. Now let's talk a little bit about the people's and the personal side of the business. This has been a very difficult year, and especially the last few months for our team and their employees in India. Almost every person has either been directly or indirectly affected by the coronavirus. I want to thank my employees and their families for sticking with us and trusting us during this very difficult time. I also want to thank our customers for empathizing with this gravity of this situation and working with us during this very difficult time. Now, despite this hardships, we have been able to make our commitments and make our SLAs to our customers. On the positive side, I'm very happy that Chairman Giancarlo has decided to join us during this part of our journey. This is going to be a very exciting time, and we look to his advice and his guidance as we navigate the next few years of the Baton journey. Next, let's talk about the product and the enhancements that we've been working for the past 2 to 3 months. Now, later in this show, we will have Tucker demo the enhancements that we've been working on for the cleared collateral product. I'm very excited about this as we continue to add more FCMs to the platform and we continue to add more CCPs to the platform and further enhancements to the rules engine. Stay tuned for the later part of this show to have a full demo of the collateral platform. The other thing that we've been working on actively is on intraday liquidity management. Our customers wanted us to look at this problem in great detail and see if the same platform that we have will help solve that particular problem. We've been working very closely on that one. The way we look at this is we map in your exposures and obligations in real time. We are also able to map your funding sources. That's all your debits and credits across your various Nostro accounts that you use to pay out your exposures and obligations. And by doing so, we are able to bring in significant control and visibility into your assets and as well as your exposures and obligations. And we believe that we will be able to roll significant enhancements to intraday liquidity for our customers. We are looking to roll this out over the next few months, and this is going to be a very exciting time for everybody here at Baton. Thank you again. Looking forward to our next phase of our journey.
Thanks very much, Arjun. A great explanation of Baton's progress and our aspirations. And of course, I'm sure everyone is thinking about our friends and colleagues in India during these difficult times. Now, I'd like to introduce you to our next contributor, Colin Lambert, co-founder and publisher of The Full FX. And now it gives me great pleasure to welcome to our show Colin Lambert. I'm sure many of you know Colin from his 19 years at Profit and Loss. Prior to that, he spent over 20 years trading in the markets. At Profit and Loss, Colin and I were talking earlier, he must have moderated many, many hundreds of panels, argued with lots of people across the globe, from locations as diverse as Wellington and Stockholm, Hawaii, apparently one time as well. More recently, Colin has launched The Full FX, and congratulations, Colin, on doing that. That's obviously been a huge success and a great transition for you. Colin, welcome to our show. Thanks very much for taking the time to join. Great, very good. Colin, I want to ask you a few questions, if you don't mind. And I think the focus here is you're somebody who hears the opinion of many people in the market. You create opinion as well, I think, through your pieces. And so I'm interested to understand what you're hearing around the traps, if you will. And so, first of all, just sort of a general question, where do you think the areas are that are generating the most conversation, the most interest in the FX space right now?
What I would have to say, Alex, I think is to kind of frame it is I love the fluidity of the foreign exchange market. Yeah, we had a discussion about this last week, and in the interim, something new has come up that people are chattering about. The things I would say, generally speaking, are liquidity. People always worry about whether they can get their deal done. Generally speaking, I think people are content with that. The last week has seen people suddenly find that there's been a change in the market maker behaviour. And so what's happened is margins are being squeezed and hedging strategies are not quite working the way they did. So there's clearly this, it's highlighting the interconnectedness of the FX market. So how one thing can just have this spillover effect all the way down. So there's a lot of conversation at the moment about the rules of engagement, which I think a lot of people thought we had sorted out. But again, someone's done something fairly innovative, clearly, or something different, and we're back to square one and everyone's having this conversation. So I think the rules of engagement will always be an interesting topic of conversation in FX markets. I think the other thing that's really capturing people's imagination is digital assets. Now, I think the cynic in me says that when the banks come piling in, it's often time to get out. If I may offend our audience early, it's always good to get them on side early. But I think there's a tremendous amount of interest in the industry about what the technology in the digital asset space can do. I'm not convinced we're all, balls on Bitcoin and NFTs and, dodgy coin or doggy coin, whichever way it's pronounced. I don't think it's necessarily about that. I think it's very much about the technology and this experiment. There's a live experiment going on with a new asset class in market. So I think we'll see more and more of a spillover into FX from digital assets in terms of how we sort of handle and build the next framework for foreign exchange. The other thing I'll say, it's not exciting, but regulation. People are still coming, we've got UMR bringing in a whole bunch of new firms, SACA's on the horizon, they're still coming to terms, with so many different rules. So I think regulation is always going to be another topic of conversation. What I find interesting is how the Global Foreign Exchange Committee has managed to drive so much of this conversation in recent months. They've really stepped up to the plate, which is something they possibly weren't doing 3 years ago, when there was a sense that there was actually, there was a bit of a drift there. So their feedback program highlights things like TCA and algos and disclosures. and settlement risk, which I know is dear to your heart, because I think what we're managing to do, thanks to the GFXC, is actually move forward on a lot of these issues. And the conversations that are being had because people are ready to innovate.
Yeah, that's interesting. The whole GFXC feedback process is one that I think is going on right now, isn't it? And it goes on for the yeah, yeah. And I know that Baton actually has also been involved in providing some feedback as part of that process. It'll be interesting to see what comes out of that. And obviously, our interest, to a very large degree, is based around how best to mitigate settlement risk, what technologies can be used. We've argued for a while that we've presented for a while that there are, the technology exists, and I think people sort of know that it exists. It's a question of sort of just moving forward. So, a question for you then, as we think about that, settlement risk it was mitigated to a really material extent, 20 odd years ago with the introduction of CLS, which has sort of grown a little bit since then. But it is still an issue in the market, and I guess the question for you is, why is it still an issue? How's it been allowed to still be an issue? And what will it take for the really big guys, for the major firms, to get on the front foot and find a solution or implement a solution?
I think the key reason why it hasn't been dealt with more than it should have been is the fact that it's not about a client-facing function at face value. Obviously, the benefits will knock on down to clients, but the mantra of all institutions is the client is at the centre of everything we do. That means that when you're looking at structural solutions, that it's very hard to differentiate yourself in. They come into focus every decade or so. If you go back to, I guess, the turn of the century, the banks kind of had to be dragged to the table over electronic trading platforms that enable customers to have the same access they did. There's innovation out there, so it's to be expected that this will try and give them an edge with their customers. Settlement struggles to, I think, get oxygen in that argument. I don't think there'll be particularly big moves on it this year. I mean, I think the firms are looking at the infrastructure, and they probably want a clear leader to emerge, which I think is a lesson from the turn of the century as well with the multi-dealer platforms. It costs some banks quite a lot of money when they back the wrong horse.
I was part of that process. Yeah.
Yes. I can go back far enough to EBS, when EBS launched as well. So there's always this fear of how it works. I think in terms of there's probably the bridge to your second question is, I actually think that whilst we can be satisfied with CLS, I think there's a degree of complacency about how well it works for the industry. And I think, the BIS surprised a lot of people outside of the central bank circle by highlighting this in their 2019 triennial survey. It literally was from left field. We don't talk settlement risk, we're talking trading volumes here. Why are they suddenly thrown out settlement risk? And that got a lot of people's attention because that was frankly a flag to the industry that the authorities want something doing about this. And they produced some very, very compelling data behind it, as you're aware, that actually said, and that again made people sit up and stare. So I think hopefully we're at the stage now where we don't just sit there and wait for CLS to extend its reach, because that could take years, and in some cases in certain emerging markets it won't happen at all. So I think this warning flag from the BIS has been picked up by the GFXC, and the GFXC has maintained the momentum. It's kind of answered that call to arms. And I think interestingly, there's a proposal from the GFXC in its feedback program now on settlement risk, and it has what I consider to be a very strong statement in it. Previously it was on the lines of, you should look to use netting obligations to reduce your settlement risks. And that was it. It was like one line. What they've gone to now, and it's like, I'll paraphrase it because I don't want to cite the document because it may change slightly. But what they're saying now is that if your counterparty does not participate in PVP programs or arrangements and does not use obligation netting, you should consider reducing your exposure to that counterparty. Yep. That gets people's attention because that is very, very client facing. Because that means there's the buy side looking for a solution, and it means the banks are suddenly saying, if I can't deal with my number 3 customer as much as I could, This is a problem.
Yeah. It also has the impact there of perhaps restricting access to the market by some participants, who will find their lines are pulled in because they're not eligible for any of the existing sort of well-used PVP programs, who perhaps are not that well capitalized and who've got, limited settlement lines. And so then the opportunity, I guess, or the need to implement PVP or potentially like payment on payment solutions to mitigate that risk, I guess, are very serious. So, question then, and I'm not sure that I certainly don't know the answer to this, but how, if a statement like that comes out from GFXC, how much notice do the banks need to take of that? How do they respond to something like that? Does it really call them to do something, with a degree of urgency?
99% of banks in the foreign exchange industry have signed a statement of commitment to the FX Global Code. This basically says you need to, and I think, to be fair, this is not actually an issue for the banks. This is an issue for the buy side.
If they
Most
get denied
banks
that
are
access.
accessing a PVP, but I think the bank, again, to go, the banks will look to their clients. The banks will drive their clients towards a different solution. The clients will look towards the banks again for a solution. I don't think the banks actually have the solution. I think the solution comes from outside the industry, from the fintech industry. So I think the banks have to pay attention to this because it will impact client relationships, and they have those statement of commitments.
Yeah. And look, again, to sort of, the Baton sort of marketing line, the technology is there. Whether it's Baton, and there may be others, but the technology is there. It sort of, it needs to be implemented, I guess, on a broader scale. So
Yeah, I
changing
definitely
topics.
think. Sorry, just on that point, Alex, I do think that what the GFXC is saying between the lines is we need to look at more than the current existing solution. I think they're saying CLS does a good job, or it does, but there are other solutions, and we should be looking at those maybe more deeply than we have been.
Yeah, and I think that comes back to your earlier point. If people simply wait for CLS to expand its coverage, it could be a very long wait.
Yeah, and it's not CLS's fault. It'll be the local authorities.
No. Exactly. So just sort of changing gear a little bit, and we think about the spend. Certainly, when I was working in the banking industry, the spend within the foreign exchange business seems to be, very, very focused towards client engagement, towards risk management from the perspective of market risk as opposed to sort of counterparty risk. Very focused, electronic delivery, so on and so forth, reduction of headcount in dealing rooms, and so on and so forth. So I want to ask you about whether you see an emergence of a focus on that post-trade side of things. Are people still obsessed about that client engagement and market risk management, or are people starting to move their focus away from that towards the post-trade arena?
I think it will always be focused on the customer interaction, because they've built up this mantra of client-centric, and that makes it very difficult for a manager, especially one who may be fairly new to the business, because there's been a lot of managers step up over the last 3 years, which in one way is a very positive thing, because they're open to new ideas, which I think the industry needs. But the negative is it takes a very brave manager to now turn around and say, okay, we're actually going to invest a chunk of our hard-earned technology investment dollars in a post-trade solution that will not obviously benefit our client relationships. So I think there will always be that customer interaction. And I think also, the risk management, if you look at it, clients and risk management, they make money from one and they potentially save money from the other. So, banks are not charitable institutions. They do have to make money. I think sometimes we get into this thing about, how come they're making so much money? How much is enough money? They do have to make money to actually provide these services. So I suspect, if anything, the sell side will be looking for a solution. And it goes back to my earlier point, I think, Alex, they're looking to back a winner. My sense at the moment is that there actually is no single solution out there that everybody thinks will be the future. My sense is that they'll be looking at 3 or 4 different aspects of post-trade, and they'll be looking to seamlessly connect those. So there'll have to be a degree of collaboration, between someone like Baton and someone, like a Capitolis or something who's got the compression, novation and stuff. There needs to be an element of collaboration about it. But if we do get that, then I think the banks will support that, and it will probably come. Utilities are a hard word because I think we can both agree utilities have not really been particularly successful in foreign exchange in terms of efficiency. But what they want, they want to back the winning horse. They want to make sure they come up with the right solution, and they're hoping that 3 or 4 points of the compass will provide that solution. So there will be an interest, but I'm not convinced it will ever be front and center.
Yeah. So, and just responding to that, I suppose the client centric is really important. To come back to the earlier point you made, if you can't service a client with settlement risk issues, you got a problem. Yeah. The other point I would sort of counter or just sort of throw into the mix there is banks need to make return on capital. It's not just about top line revenue. And so return on capital does mean you've got to look at your cost base as well as your sort of client centric piece. And I suppose those points I think are sort of, we find are important parts of the conversation. Very interesting. I'm going to finish off, Colin, with one final question. Quick, I know you always do this in your conferences when you're moderating. Prediction for the year ahead. What do you think?
Okay, FX swaps. There'll be a lot more automation in FX swaps. I think it will have ramifications elsewhere as well. This will increase the focus on whether we clear these products. I'm less sure there will be that in FX because too many clients want delivery. But I do think that the automation of FX swaps, that leads into your point. I think capital optimization will be a big thing in this world. And an automated swaps market can help that as well because it just delivers more data to the post-trade, which can get into the feedback loop back to the pre-trade. So I think we're heading in that direction. They would be the 2 key themes for me. What I would say is, to end on a note of optimism, 15 months ago, I was in London going around the banks, literally the week before COVID really struck the UK. And they were all excited about the budgets they've been given for their innovation on their platforms. Those budgets, my understanding is, have rolled over because they had a good year last year in terms of revenue. So I think actually the good news is that there's actually investment dollars available to back innovation in FX. So I think it might not be 21, it might be 2022, but I think we are about to go through a new innovation cycle in FX.
And look, we're certainly seeing, I think, appetite for those conversations with the major firms right now. So I would concur with that. Colin, it's been an absolute pleasure. Thank you so much for taking the time to join us, and hope to see you somewhere in the flesh again sometime soon. Thanks a lot.
That will be nice.
Thank you. Bye-bye, Colin. I hope you found that conversation with Colin interesting. He certainly talks to a lot of people in the industry, so very helpful to get a download from him. Next up, we've got Arjun to talk about success. And now for a slight change of pace. I'm very pleased to be joined by Arjun Jayaram, CEO and founder of Baton Systems. Arjun, welcome back to the show. Very exciting to have you here. It's been a great show so far. And what we thought we might talk about here, the two of us, was around success and the measurement of success. The bulk of this conversation, I think we want to put aside for how our customers feel success and how we try to deliver that success and how they report it back to us. But just before that, I thought it might be helpful for the audience if you reflected on the evolution of Baton Systems and some of those elements of key success that you felt over the last 4 years since you founded the company, just highlighting some of the areas that you found really exciting.
Absolutely, and great to be back on the show. When we started the company, we focused a lot on our core value systems and also on our priorities. Our core value systems is very quickly, it is integrity, trust, and hard work. But the thing that also we talk about the core priorities of the company. We made sure from day one that the customer is number one. And we truly mean this. It's not just a talking point. We truly mean that the success of our customer is the success of that. If you're vested in that, we get a better product. We are able to realize better values, and therefore that will turn into gains for the company as well. The second one on that is our employees and their families, because again, it's just a startup. This is about our people. And the third one is about our investors who have trusted us in our journey. Now, I want to come back to the customer part of our core priorities. Making sure that this is the product that we're building actually solves the problem of the customer. And for that, you have to understand a day in the life of a customer. In large global organizations, there are multiple stakeholders. There is the operations team that is sitting in front of their desk every day, trying to move millions of dollars or hundreds of millions of dollars. The second one is the people in the risks team. The third one are the people in the treasuries desks. And lastly, you want a system that is technically very sound, highly reliable, highly secure. We've been very happy that we've made progress in all of them. Making sure just tying our success back into the success of the customer. And the most important thing is listening to their problems and understanding their problems at a very, very core, and able to integrate into their core system so that you can start realizing values on that. Also very happy with the team, with the team that we've grown, and also very humbled with the addition of very well-known people in the industry, such as Chairman Chris Giancarlo and Jerome Kemp on our advisory team. That's an important part of our journey. The next one that our customers probably don't see is the amount of resilience that we have built around the information security in our SOC 2 audits, making sure that it's reliable. It is actually confirming to the SLAs. When we say it is 99.99% available, it actually is. We have actually made sure that it's got the disaster recovery and the business continuity plans. Growing up our information security team and our support team to be able to truly provide a 24-hour 6 days a week global support. I'm very happy with this, and everybody at Baton is very excited when the customer achieves this success.
Yeah, those are great measures of success, I guess, that you've articulated there, and they're probably, to be honest, they're not visible always, are they, to the outside world? So I think it's quite helpful that you've managed to articulate those. I think that's great. Let's move on now to the main topic of conversation, which is really about the success that our customers derive. The feedback that we get from those customers. One of the ones that I want to just throw out there when I first joined the firm was the report from one of our customers that they'd managed to generate a really material increase in the net interest income that they earn on the collateral posted to one of the big CCPs. A really significant economic gain that had been manifested and resulted from using our technology. Arjun, do you want to build on that and any of the other ones that you've heard about?
Absolutely. We looked at this problem. I broadly classify the problem as three phases. One is anything that you can do in real-time visibilities and real-time control is going to be of tremendous value. And having real-time visibilities means that you need to connect up to as many locations. It could include your CCPs, include your custody banks, to be able to have real-time visibilities of what you have assets at the various locations. And the next one is to bring in the controls and the control on the movement of that asset. And for that, we are very happy about the processes that we've built around the simultaneous synchronization and orchestration of asset movement. Process that used to take 24 to 48 hours, if you can shrink that to 3 minutes, which we have consistently shown, we can do this within the framework and within the systems that operate today. To be able to shrink that to 3 minutes, it brings significant value for all our customers. How you measure that is going to be slightly different from a bank to bank, but to be able to consistently go and do that is been very, very important.
Absolutely, and just to you've mentioned some very important things. A couple of the other sort of key metrics that have been mentioned to me. One of our customers spoke to us about a 25% reduction in their post-trade costs. That was in the FX space. Somebody else spoke about a 70% increase in their capacity because of the sort of operational process and consistency and workflow. And then, Arjun, recently, we've spoken on the previous show as well about the 90-day methodology. Recently, I thought it was fascinating to have a new customer go through that 90-day methodology, consume its own transactions into our platform, be able to measure what impact that it would have, and come up with a tremendously compelling business case for the implementation of the Baton system, which is a process that we're going through now. I thought that for me was real success to see that happen. But it's not just, I guess, is it about the end result? It's all about the way they get there. And I think, Arjun, we're always very proud, aren't we, about the fact it's not rip and replace, and that we can implement in a sort of reasonably short space of time.
Absolutely. This is an area that I'm very passionate about. You've heard me speak about this and probably go off for many minutes talking about this. To be able to integrate, first, to be able to understand the problems in a bank is not easy. It's a global organization. It's multiple jurisdictions, multiple legal entities within one bank. And now you talk about interbank settlements or inter settlements outside the boundaries of a bank. Now you get into distributed workflows, you're getting into different asset classes that have to be synchronized and orchestrated. And all along the way, look at what status quo is. The status quo is paying out one side and hoping that the other side will come in at some point in time in the future, outside of certain organizations.
And aside from that, if I can interrupt, it's also about funding on the basis that you have no idea when the opposite side is going to come in.
Absolutely. I mean, now imagine, take a step back and see from first principles what has happened in status quo. You do not have visibilities, real-time visibilities into your liquidity positions. Therefore, there is and also during the process of settlements, there is a risk element that is there. So people think of this just as an operational savings or a technology savings and all that stuff. While that is there, it is very important to understand that you are integrating into the core systems of a bank. You're actually fitting in with the existing rules and the existing operating rules and providing better visibility and better control. To be able to go in and say, just turn on a few knobs on your side and suddenly you have all the data that's coming in. You're able to get your exposures, your obligations in real time. And now you can program the movement of assets, simultaneous movement of assets, whether it's payment versus payment, delivery versus payment, or payment upon payment, a whole series of payment strategies for enabling safe settlements. And that has resulted in tremendous savings for a bank and very positive ROIs in matter of months.
Yeah. So running out of time a bit, I just want to mention, one of the comments that one of our favorite customers makes to us sometimes. He calls it transparency, workflow, and auditability, and I think that's a tremendous sort of message, a measure of success, I guess, if we're able to deliver that. If we then think about delivering that whilst, I think, allowing the banks to retain their efforts, their technology efforts on their core banking solutions, on risk and control and on those aspects, rather than spending money on plumbing, rather than spending their resources on plumbing, then I think we feel we've done our job well, don't we? I think that's important. Let's move on. Final part of this conversation, Arjun, the future. What does success look like in the future, do you think?
Thank you again. This is a very important thing to understand. We have solved problems within one bank. We've solved problems across banks as well. Able to do true payment versus payment across banks. We would be the first ones to be able to do this. This is easier said than done. You have to integrate with existing systems, move real money sitting in real bank accounts, and it has to happen with settlement finality. Baton has done this already. We have settlement finality with some of the best payment lawyers in the world to be able to say that when assets move, it is final, it's irreversible, it has got auditability all along the process, and it's got non-repudiation associated with that, and it'll stand up across jurisdictions. Now, in terms of scaling up this one, while we have demonstrated that we can do this at scale across banks, we are very excited about in the future where we can look to an FMI to come in and be the administrator and the main operator of the platform. We're very excited about that piece because when you're moving trillions of dollars of asset settlements every day, you need to make sure that the operating rules is not just a legal document, that there is somebody who's actually going to be the administrator, somebody that there is a trust infrastructure or a trust structure that is already built into that. So we're excited about this. We are looking forward to making some major announcements in this front in a matter of months. Again, working this across banks is not easy. To be able to do this in a legal framework is not easy. We have done this. We want to bring in more participants to make sure that this will actually scale. We are looking at having, hopefully fast forward 5 years, over 1,000 participants to be able to settle any asset class. That is you can do payment versus payment of currencies, delivery versus payment of securities versus currencies, payment upon payment, a whole series of things that we can bring value to the marketplace. And it's very interesting to hear our customers articulate our value propositions slightly better than us. I mean, the transparency, workflow, and auditability, we love it when our customers are able to articulate what we bring to the marketplace better than we are.
I think that's right. I think true success is when your customers come up with your own marketing tags. But Arjun, hey, listen, it's been great to talk. Thank you for those insights. A great pleasure.
Thank you again.
Excellent. Next, I'd like to introduce Jerome Kemp, a senior advisor to Baton, and Mariam Rafi, North American head of futures clearing and FX prime brokerage at Citi. They're going to talk about the risks associated with collateral management and how new technology can be deployed to mitigate those risks.
Thank you, Alex, and welcome back, everyone. It's my pleasure to be joined by Mariam Rafi, the Global Head of Financial Resource Management for Citigroup's Futures Clearing and FXPB business. Hi, Mariam. Good afternoon to you.
Hi, Jerome. Good afternoon, and thank you for having me.
My pleasure. So, Mariam, I wanted to spend the next 10 minutes or so picking your mind a bit about collateral and how the role of collateral within the broader clearing context has been evolving. Clearly, over the past number of years, there's been a very keen increase in terms of the role of collateral, the importance of collateral in the broader margining process. And Citi indeed has been a prime mover in this space. I was wondering if you could walk us through, as a means of introduction, what the prime movers are, or what the prime reasons are for this keen interest in collateral movements themselves.
Absolutely, Jerome. I think, as we've seen more and more of the market moving to central clearing, we've seen just a marked increase in the amount of collateral that's moving through the system at the moment. We've also seen further collateral demands coming up with the non-cleared margin rules on the horizon, impacting many of our clients in September. And in addition to that, the COVID volatility that we saw last spring very much highlighted, other factors around collateral uses, such as margin procyclicality at the CCPs and just increased drivers of liquidity needs for the firms. So, for us, we've been very, very focused on trying to figure out how we most efficiently use both the collateral that clients post to us in terms of moving that to the CCPs in the most effective manner, as well as our own liquidity resources as a firm. In addition to that, I think there's an increasing theme of broadening the scope of collateral that people are able to use for their liquidity needs, given, as I mentioned before, just the increased drains on people's funding requirements. And as a result, I think, just more flexible ability to post collateral in its various forms is becoming more and more important to our clients. We're seeing things like, the introduction of gold warrants as collateral at certain CCPs. There are others who are broadening that collateral scope to include, a broader range of products such as agencies, for instance. And so as an FCM, we need to be very nimble in keeping up with these growing population of assets that our clients want to be able to post to cover their margin requirements.
Thank you, Mariam. So I know that Citi, as I mentioned, was an earlier adopter of Baton's collateral functionality, and I'd like to understand better, without obviously revealing any state secrets here. But what has been, I guess, the primary impact or benefit that you've seen as the overall, call it, frequency of your collateral movements increased? Have you been able to move different types of collateral in different shapes than you formerly were able to do? Could you take us a bit, deeper into, I guess, the more, call it, strategic objectives that you're seeking to achieve here?
Yeah, absolutely. So as we looked at the market landscape, just the increased velocity of collateral, the rising liquidity demands that we were seeing, particularly in stress periods, it became very clear to us that we needed to put together a holistic integration of our liquidity needs, our collateral inventory, and then optimize the collateral that we had on hand in order to post it through to the CCPs in a very integrated way. And so one of the things that we did was come up with an overall collateral strategy. These are our needs. This is what we want to accomplish. How do we go about accomplishing that in the most efficient manner? And as we were plotting out that roadmap, one of the things that became very clear to us was that at the moment, if you're a clearing member trying to post collateral through to the CCPs, it's very disjointed. Everyone has different methodologies of doing it. A lot of the major CCPs actually required us to plug in security movements in a GUI manually, which is really not strategic in any way, shape, or form.
Mhm.
And Baton, was building out broad-based connectivity via API, which we found very attractive because that would reduce the need for us to go out and build individual CCP connectivities. So they would serve as an interface that would enable our collateral team to move much more seamlessly. So that was very attractive. And I think we're seeing real efficiencies of scale in terms of them, being able to bring more and more CCPs on board as other FCMs are realizing the same benefits to that connectivity. The other part of the strategy is, having transparency. So, what are our sources of funding and what are our uses of funding? So we actually partnered with Baton to integrate with our custodians as well, to build out actually real-time functionality on what our long boxes held, which which is a new development in the industry. So via updating throughout the day Swift messages, Baton is able to reflect movements in and out of our custodial long boxes so that we know what we have at any given time, as opposed to having to rely on start of day snapshots, which was what the industry standard was previously. And so we can be much more nimble about using client collateral on an intraday basis as well to move over to the CCPs. Finally, another benefit that we see is, as part of the holistic framework that we're using, where, it also very much eases our collateral movements to foreign CCPs, where previously we would have to do a number of hops via different city legal entities, dealing with time zone challenges, different cutoffs. The automation that we're able to achieve with Baton greatly simplifies that set of movements as well. So, those are some of the primary objectives that we were trying to achieve from a business perspective as we charted out our roadmap, and the functionality Baton offered fit very nicely with, the business objectives we were trying to achieve.
Thank you, Mariam. So it sounds like, I guess, the standardization that you're able to achieve by essentially communicating across APIs, the ability to more dynamically manage your inventory of eligible collateral, and I guess the disintermediation of internal hops in terms of moving things around cross-border have really been, advantages to the overall strategy at Citi. Earlier, you had mentioned, though, I guess, eventual, positive impacts to broader liquidity and call it funding management within sort of the broader scope of the management of your business. Can you shed a bit more light in terms of how liquidity or funding eventually, would be positively impacted by what you're doing in this collateral space today?
Absolutely. Well, one of the big takeaways that we saw from the market volatility was that operational friction can drive, a lot of inefficiency in funding. You have market stresses on the one hand, requiring, increased outlays of funds, but operational noise can also very much magnify that effect. And so the fact that we're now able to, as a holistic program that we put in place, reflect to the CCPs in real time what collateral we have coming in from clients. So we're able to reduce our LSOC impact. We're able to move securities so we don't need to fund them with our own cash. If they're coming in intraday, we can move them much more quickly. And so we aren't, borrowing to cover customer margin requirements that are basically already covered with clients posting in securities. All those things have yielded very tangible benefits in terms of reducing our funding needs, even when the markets are more volatile. So as an FCM, we hold a huge amount customer collateral. We segregate over 50 billion of customer assets in the US. The question is really, how do you utilize those assets most efficiently, and how are you able to move them rapidly over to the CCPs? And so the Baton rollout has helped us facilitate that. The other part of the equation that I'm very excited about is optimization. So, we're actually partnering with Baton to build out an optimization algorithm as well that's integrated into the holistic collateral management capabilities we're using, which is going to be incredibly important, because one of the other themes we've seen from the CCPs as more and more people post collateral is that the CCPs are charging fees on collateral that vary quite tremendously between different venues. And so that adds an additional layer of complexity to figuring out what you post where. So integrating the Baton optimizer into our overall, inventory and movement process is also another way for us to reduce our costs to third parties.
Thank you, Mariam. That's really, really interesting. And it sounds like Citi is on a very exciting path relative to the way it dynamically manages its daily margin and collateral movements. So thank you very much for sharing your insights with us. I think this is about all the time we have today, Mariam. So I would really like to thank you for taking the time out of your very busy schedule to share your thoughts and insights with us. And with that, I think I'll hand it back to Alex. Thanks again.
Thank you.
Mariam and Jerome, that was tremendous. Thanks very much to you both for those thoughts. Tucker Donor, our head of business development and client success, is now going to demonstrate our collateral management solution.
Today I'm going to show a demo of Baton's cleared collateral platform. This platform is in production today with several major FCMs and CCPs. Baton's cleared collateral platform offers a variety of functionality to the FCMs today. In particular, we have a summary screen that normalizes and standardizes information coming from all of the CCPs. We have a collateral profile screen, which is a very quick and easy way to see haircut and cuff information across the CCPs. And we offer a consolidated source to pledge and recall assets directly to the CCPs without having to go to each of their GUIs. Now we'll get started on the summary screen. We have sorted the data by the largest excess. From this screen, you can get an overall picture of requirements and holdings, both cash and non-cash, at a summary level. By expanding any account, you can see a more detailed view by currency. Here we can see there's a $3.9 million Aussie dollar non-cash collateral posted. Let's remember that number. On the right-hand side, we show the last time the information was updated. All of this information is updated intraday as real-time as each CCP offers. The information is, of course, downloadable to Excel, and with integration can be sent to FCMs via API or SFTP. Now we will use the ribbon at the bottom to navigate to the global long box. The global long box consolidates all of the assets of an FCM, both encumbered assets, which we consider to be what is already posted to the CCPs, and unencumbered assets, which may be held in FCM custodial accounts. Baton obtains the CCP assets via our direct connectivity with each CCP. For the unencumbered assets, FCMs can upload that information via this button here, or we can integrate directly with an FCM's custodian to retrieve that information in near real time. If we filter on clearing broker, these are all of the assets held by the FCM and available to post onward to the CCPs. By filtering on the CME and Aussie dollar, we find the assets that make up the Aussie dollar posting that we saw earlier on the summary screen. Now let's do some postings. We'll navigate to the movements section on the ribbon at the bottom. We see most FCMs on the Baton GUI using the bulk upload functionality. Baton also offers integration to have these postings streamed directly from an FCM's margin platform. From here, we can download the template, populate that template, and then upload a series of movements using the CSV file. This allows you to use the Baton platform across several CCPs rather than logging into each of the individual CCP GUIs. Today, we will demonstrate how to pledge a single asset. We're going to pledge to the CME, and we will choose this first account here. Once we do that, we see our available long box assets. We will post out these French government bonds, but not the entire position. We will post 10 mil par amount. Here we can see the orange circle on the left-hand side has given us a warning, so let's take a look at that. We see that we can't pledge French govies to the CME at this point in the day. From here, we have the option to ignore the warning and submit anyway, which we will do today for demo purposes. Here we can see our pledge has been created, and if we click into the line item, we can see the status progression on the left-hand side. Pledging and recalling is the same consistent process across all CCPs, all done from the Baton cleared collateral platform. Next, we will move over to the collateral profile screen. On this screen, we can look at assets and their respective haircuts at the various CCPs. This allows for a quick compare across the CCPs for a single asset, or we also allow for the bulk upload of a group of assets. This will help in the decision-making process for pledging assets. Lastly, we will cover the Baton rules engine. The Baton rules engine allows FCMs to begin to automate certain processes they are doing today. We have shown some examples of default rules we have created here. Each rule has a trigger, a condition, and an action to take. For example, this first rule is triggered to run at 11 a.m. daily. The condition is if there is an excess exceeding 15 mil at Eurex. And the action is to then notify the user if the condition is met. Rules can also be used to automatically generate a movement to sweep the excess back to the FCM. Thank you very much for watching our demo. I'm going to throw it back to Alex now, where I will be joining him for our Q&A. Thank you very much.
Thanks so much, Tucker, for that clear demonstration of how our product works. For some of you who may not have seen the product in recent months, I'm sure you'll appreciate the functional and visual enhancements that we've added. Now, I'd like to open up to the audience Q&A. So during the course of the show, a number of people have been kind enough to send in questions. Thank you very much indeed for those of you who've done that. And I've asked this to Arjun. A few questions, Arjun, around the PVP products and what our plans are as we go forward and how we expect to implement those plans. Can you provide some response on that, please?
Thank you, Alex. We are very excited and working quite hard on the PVP 3.0. This is the one where we will have an FMI that's going to act as the administrator for the platform. We think there are three important things. One is finding the right FMI who can actually administer this in multiple jurisdictions. And the second is finding the right set of initial and early adopters. And these are customers that we've been working for quite some time, and also potential customers that we've been actively working for quite some time on being the first early adopters of doing a true interbank FXPB. And we expect to complete that towards the end of this year and have the first flows towards the end of the year. And the last part of it is the settlement finality and the set of operating rules. We do have a very robust framework. We look to working with our early adopters as well as the administrator to tighten this over the next few months.
That's great, Arjun. And certainly I've been involved in some of the conversations on the client side. And I've been listening to some of the conversations we're having with the FMIs and the trusted third parties. Fantastic to see that progress take place. And I think it'll be a super, super exciting path towards the end of the year as we work towards that. Second question, Tucker, I think this is aimed at you. It's regarding, of course, the collateral piece that you demoed earlier on. And it's a question really about the coverage, the CCP coverage, and how we plan to expand that, and whether or not you have any information that you can provide or share regarding the volumes or the percentage of expected volumes that we can handle.
Yeah, sure, Alex. Thank you for that. As with a lot of other folks in the clear collateral space, we look at the publicly available information. So there's a lot of great publicly available information regarding size of margins held at various CCPs. We think for the average FCM that we're covering about 65% of their movements today, 65% of their margin, and therefore about 65% of their movements. We have internally at Baton partnered with a number of CCPs going forward. In the third quarter, we have a very aggressive roadmap. So that 65% number that I quoted earlier, we think we can get that to about 80% by the end of the third quarter. And that's adding connectivity to CCPs that we don't, to which we don't have connectivity today.
That's great, Tucker. And that connectivity, of course, is both consuming data, but also sending the data, the instructions for the pledge and recall back into the CCPs. And obviously, everybody's very interested to see that percentage go as high as possible. So that's fantastic progress. Congratulations, Tucker. I think probably in terms of questions, that's all we have time for. So just before we conclude, I'd like to ask both Arjun and Tucker, anything you want people to really take away from this show?
This is a very exciting time in the world of clearing and settlement. There are some very important changes that are happening outside, that is in central banking. Some requests for information as well as requests for comments in the areas of digital assets at a central bank level, central bank digital currencies, and also things like operating as a central bank account, and allowing companies like Baton to be able to operate clearing and settlement at a central bank account. We're very excited about those structural changes that are happening in the industry today. The other thing that I'm also very happy is our customers coming to us and asking us to solve some problems that they're facing today, and that is around intraday liquidity. These are hard problems. They've been grappling on this problem for quite some time. It is very interesting to see how the same platform that we have built is able to adapt to be able to solve a slightly tangential problem, which is intraday liquidity, and that's where we bring your exposures and obligations as well as your funding sources and map that in real time and be able to roll these efficiencies to markets in very short order. This is a very exciting time.
Alex, and then on the collateral side, I think two things to take away. First, as I mentioned earlier, the growing connectivity with the CCPs. We really think that at this point we have the vast majority of virtually every FCM's requirements covered, and that's only growing from here. And then the second piece about the Clear Collateral platform is our functionality. So we have several very large FCMs using the platform today. As they use the platform, there are enhancements that are added to the platform almost weekly. And so the functionality, including things like the rules engine that you saw earlier, we are building out that functionality every single day to include new practical applications for the Clear Collateral platform.
That's great. Thank you, Tucker. I would just add, for my 2 penneth worth, the momentum that we see internally, hiring, development, as Tucker talked about, developing the network of connectivity, the client momentum, the conversations we're having. Really, really interesting to see those ramp up and accelerate as we start to, deliver more and more, and I guess prove ourselves with the customers that we're working with. So thank you both indeed very much for your thoughts today. Really appreciate it. Thank you for that, everyone. That brings today's show to a close, and I'd like to thank all of the participants for their time and for their valuable insights, and for the audience for sharing their time with us today. I do hope that we've helped you to better understand Baton's offering and the need for change in the areas of collateral management and FX settlements, not only the need, but also the opportunity. Please do look out for the industry article, which will be sent out shortly to everyone who's registered for this show. It focuses on FX settlement and how Baton's solution can help mitigate the risks associated with that. I hope you'll join us again for our next show, where we'll be taking another close look at technology changes and innovation in financial markets. Until then, thanks again for joining us, and look forward to seeing you again soon. Bye-bye.